Hello, hello everybody. Hi, hello
All right.
everybody.
Hi,
Hello,
Matt.
Louis.
Hi, Chris.
Hi, Chris. Thank you for being here today. So we're gonna wait like maybe a few minutes before going through all webinar. But first of all, maybe just like a quick presentation. So I'm Emmanuel. I'm in the marketing team at A Plus, and today I'm so pleased to have Louis with me and Christopher. So Louis, I'll let you introduce yourself.
All right. Thanks, Manu. Thanks for preparing this beautiful webinar today. Thanks for being there, Chris. So I'm Louis. Yeah, I'm CEO at A Plus, but my main role is around business development and basically trying to figure out ways to create value in the market. And I'm very pleased to have Chris with us today. That has been pushing us in a very positive way in the past years to basically up our game and try to answer the market's challenges. So again, Chris, I know you're a very busy man. Thanks for taking time uh, to join in today, and I'll let you introduce yourself, and then we'll slowly jump in.
I appreciate it. Thank you for having me and thank you for making the time. And certainly thank you to everyone out there who's joined us today. For those who don't know me, Chris Thorne, I'm at brokerage CBRE. And what I do specifically is I work in agency listing, which means I provide advisory services and consulting for institutional grade owners of office property, specifically in the Montreal market. Prior to joining CBRE, which was as recent as March earlier this year, I was occupied in various positions for the last 15 years on the landlord side of the business. And so I've done it all from day-to-day execution of leasing up through the executive functions of the company. So my primary focus at all times in my current role is really to help elevate landlords and to help them to sort of shift their businesses in the current market trends and to help them sort of set themselves apart.
All right.
Right.
Fantastic. Thank you.
Which bring us to the topic today. So thank you for being here. People are joining, so we're gonna deep dive into it. Today we're gonna talk about a game-changing tool for landlords and commercial real estate brokers. Get deal certainty with committed budgets and clear timelines shaped by upfront cost control. That's quite a title. So we're gonna just see what does it mean exactly, which bring us to the agenda. So first of all, setting the stage, I think we just set up the stage, so we're done with it. Second of all, market conditions and challenges. So I'm a bit curious to hear you, Chris, about the market conditions and the challenges. Of course, Louis as well. Our third part, we're going to talk about integrated solutions and project packaging, and to finish by the future outlook. Of course, we're going to take the questions, so you can just write your questions in the chat if you want, and we're going to jump on it while we are doing the presentation. I'll let you go, maybe Louis
Right.
first for you.
Okay, amazing. Thanks a lot, Emmanuel. So yeah, well, basically, we're gonna navigate this agenda. The I guess the intention today, and to jump on what you said based on our lofty title for today's webinar, we're basically trying to assess what's happening in the market and to try to come up with innovative ideas on how to basically answer some of these challenges. So if we are to look into more details, the commercial real estate industry remains significantly disrupted. So we're talking about the aftermath of the pandemic, but grappling with ongoing challenges and uncertainties that demand swift adaptation and resilience. So for us, what does that mean? It means that we're challenged still today with the heights of construction costs, some challenges in getting pivoted to offer good spaces to potential tenant and basically help landlords fill their empty space and navigate what's happening in their tenants evolution. So that's one big part. And on any challenges that we're facing, I think we need to adapt a mindset. So if I pivot to this second slide, we think a paradigm shift is necessary in the way we think. So by paradigm shift, we mean thinking differently. I think since the pandemic occurred, there was a shift in how the market is basically adapting and evolving. And we're part of those who think mindset is a big foundational part of how to address those challenges. And it highlights the need for an evolution in the sector in terms of the visions landlord and building owners have, and the innovation to address structural challenges. Because there's a lot of front wind still in the industry, and there's positive stuff as well. And in both sides, I think we've seen some landlords pivot and adapt. And Chris, you've been a firm believer in that. And those words somehow in my journey of I've taken up kind of this vision and innovation wording from you. And I think it's probably a good time just to pivot, and I'd like to hear you on what the market conditions and challenges are today. You're a big player in the industry, and please give us maybe your outlook in what's happening and how things are to this point.
Yeah, happy to do so. I think when we introduce this topic, it's maybe important to take a little bit of a step back before we kind of go forward. I think it's important to understand what the levers are in the decisional process. And so without maybe making a dissertation on the history of office space, we can kind of look to the early 2000s and the dot-com booms, where big tech, primarily in Silicon Valley, sort of created this idea that brand identity and brand culture could be transmitted through use of office space. And so what we saw that period was a lot of bright colors, the climbing walls in the offices, the slides. And as we moved into kind of the 2010s, the pool of what we'll call knowledge-based tenants expanded greatly, especially as the economy ramped up to the 2010s. And the slides and the fireman poles in the offices kind of went away. But the idea that office space serves as a cultural hub and as a place where you disseminate brand values, corporate culture, and you're both internally within the company and also to the world at large, that remained. And the pool of companies looking to assert their own identity through space also grew. That being said, 2020, the crash of metal, we saw work from home mandates in place, obviously a lot of financial insecurity. And so when pre-2020, when you saw a decisional process on offices being made strictly as sort of an extension of cultural and brand values, that was being dictated by HR, that was being dictated by C-suite executives on the business side. Post-2020, almost overnight, we then saw the office become a major liability, a line item that had to be balanced against, for example, retaining talent. And the decision on what to do with space was then very much dictated by a completely different side of the company, being, largely the CFO and the accounting of the company. So we really went from one end of the pendulum to the other. And so while today, we're seeing aggressive move back to office, specifically within the financial sector, we're seeing a lot of movement in banking, accounting, fintech, et cetera. And that's largely driving the market at the moment. We are seeing a market that we could say is moving back towards an equilibrium point. We're certainly not there. We're still in very much a tenant-friendly market, and we're still not at sort of this even point. But as we do that, we are seeing organizations reassert their positions in cities. We're seeing a massive flight to quality and an investment in quality spaces. And so with that, we'll never, I think, necessarily go back to the CEO and HR calling all the shots. There's still going to be a huge component for the financials, but in that, we're seeing a much more balanced approach. And what we're doing with that is we're seeing, I think, a lot more interesting deal making. And so with that, I think in mind, and as we jump in, it's understanding that as we move towards a recovery, when we look prospectively to lease space or to lease space to an office user, the preponderance of the decision making is muddled. And therefore, the old way of doing things, which we can dive into at any time, doesn't necessarily hold. Meaning, a landlord providing an allocation while the tenant assumes all risk, while it may have been palatable in the late 2010s, well, we went from all risk to 2020, people looking for no risk, being built in space or removing space altogether. And so today, a huge lever in that is how does one support the deal while mitigating and managing risk on either side? I think that's where we have come together.
And I'm curious to hear you on, what that movement, and maybe more with the lens of today, but how does that impact landlords? Because basically there's that current that goes, and you mentioned it's probably still a more tenant friendly market. I guess your equilibrium point brings it back to probably more of a balance at one point. But is there a posture or something you see from the landlord side that has evolved based on those current of the industry trends?
Well, I think the challenge is and remains the risk analysis, right? If you look at sort of what we'll call the pre-2020 model of a fixed TI, right, a fixed allocation with a tenant assuming all construction and therefore all risk, both in terms of timing of delivery and cost overruns, that's a model that's very comfortable, right, specifically for a financial or institutional grade landlord. As tenants for a period of time fleet that completely, right, you then sort of see the floor bottom out. And now as people are going back to sort of a hybrid model, one thing that's for sure is that tenants are showing in the market that they're prepared to rent quality space and they're prepared to pay rents. But where they have a great amount of difficulty is accepting the nature of having to A, do all the work, and B, underwrite all that risk, right? And so that's kind of where the transactions can play out, because obviously deals have become more expensive than they were. And I think largely institutional players can sort of bridge that gap, but at the same time, they're not armed to want to underwrite and accept the associated risk that goes with it. Similarly, tenants that pre-2020 would have accepted it, at this point were told for several years in the market that they didn't have to. And now getting people to go back to that remains a challenge, right? Because cost overruns can be substantial. And if you're a tenant signing a deal with a fixed allocation with cost overruns, those overruns go over and above like sort of what is captured within the deal, and it can be quite expensive.
Absolutely. That's a very interesting way to sort of sum up, I guess, 20 years of commercial real estate, and to see how it pivots. I guess in all that, those potential tenants have needs, right? And those needs probably also evolved somehow, but like there's a basis that remains, which means, how to operate their business sector within an office space. So that I guess that could be a good segue, because for us, it's always a challenge. The challenge is basically to get those needs, understand them, distill them into plans that make it functional for a tenant to operate. And usually that happens within the transaction timeline. So
maybe Louis, just before going through, sorry, I'm just curious about regarding the market conditions. Maybe just sharing with you a quick poll with the audience. What is the main obstacle you face when renting a space today? Is it a lack of clear visions of the layout? Is it uncertainty about the fit out costs? Sorry, the delays in tenant decision making, or more about the difficulty standing out in the market? I guess the audience, you can just click on the reason, the main obstacle for you to rent a space. And if we don't have very reactive audience, we're just going through.
Okay, let's see what it says.
Okay, the delay. Interesting. Okay, uncertainty about the costs. Yeah. Okay, so maybe we're going through. Is it a bit surprising to have these answers, Louis, Chris? Oh, okay.
I guess it probably also always depends on who's answering.
Sure.
Because basically, you could be the tenant, you could be the landlord, you can be, a partner trying to help that transaction go through, like as per, tenant leasing or landlord leasing, or teams like what we do at Uplus or any good suppliers in the industry. There are numerous challenges, but no, I think it makes sense. Um, in terms of sort of going through to tie up to what we're trying to showcase today, I guess this is a cool question to basically ask ourselves. What if we could help potential tenants project and integrate their needs within any spaces? So basically, a tenant starts, they have needs, and they need to be distilled into functions within a space. So I'd like to just maybe fly through a few projects, that were executed within a framework of saying, cost, timelines, and scope, which are the three big parameters of any projects.
Do you mind, before we jump on, I wanted to maybe talk about how we kind of came to that land to where we're
Yeah,
going.
yeah, for sure. Let's do it.
Because I think the poll was
I
really.
you want to do that later, but like we could jump in.
Well, I think it's a good one in light of the poll, where I was going to suggest, like, it's interesting because those are all obviously things we've heard, and I think it's really relevant because in order to meet those what we'll call inefficiencies in the market, different strategies were deployed. And one of the things, going back to kind of 2021 specifically, as the work from home and uncertainty kind of reigned, was the market was telling us, if space isn't built, we won't lease it. And so, different players went to markets with plans to build out space. And so while that was, I would say, rather successful, the reality is that the lead time internally within an organization to identify spaces, bring them to base, build and construct, and then lease up was really long, while allocating all the capital up front. And so when you have a portfolio of one or two buildings, that may be a reasonable and approachable process. When you have 20 plus million square feet of buildings across Canada, like that becomes, you're talking the tens plus of millions of dollars of capital allocation without deals attached to them, which can be rather difficult. And so you get to a point where you say, well, this is not a sustainable model. And so that's where we kind of came in. We had noticed this major inefficiency of people wanting quality space and prepared to sign in the market for considerable swaths of space. However, not wanting to have to go through necessarily all the rigmarole of a traditional deal. And so at that time, I remember meeting with Louis and sort of, we sat and we talked about it. I was like, how do we commit to getting space within a predefined scope of cost on a timeline? And the challenge I put to you, Louis, was to have space delivered in how long?
6 months after a signed LOI.
6 months. And to me, that sounded totally reasonable, right? To me, that sounded like, it almost sounded long, right? And I think you and your team saw that a little bit differently, right?
Well, I thought it was a cool ask. And then, talking to the team, they thought I was, totally crazy. But since it came from you, it made sense, so you sort of helped the digestion of the idea. But I guess we're joking a bit about it, but if you look at from the standpoint of a signed LOI, what we've sort of understood is there is a lead time between the time a tenant, gets involved in the process of looking for space and signing an LOI. So at the end of the day, it was for us trying to understand how can we package quality designs within budget parameters in order to basically understand what tenants want and show them different options. And in the meantime, get ready so that if they were to go and sign that, LOI, we would be pivoting fast enough. And happy, like, I guess we had a good success with that. And it created a lot of very, good deal flow, both for, the involved landlords and the brokers involved and the tenant got quality space. And I guess it was probably good for you to sort of give that background story. I'm going to maybe just quickly showcase a few of the results that got generated through that approach. And for us, it was kind of the starting point of that reflection, where we say, okay, how can we push that further and create tools for people, and just show that if we're a bit open to changing the mindset of how we go about designing quality space, and pre-designing some of the features so we can control costs and timeline, it would help the industry evolve in a more dynamic sort of ecosystem in which everybody wins. Because basically, if people are looking positively into going back to high quality office spaces that they can afford and have in a timely manner, well, that's what we're all here for. And at the end of the day, it provides quality space to people to go work within their sector and create value in their own economy and in their own activities. So let's maybe just look into quickly a few very cool things that were generated by that approach. And an image is always cool to start with. We're not going to name the official projects, just in respect of who the clients are and everything, but basically those are designs that were generated, and jobs that were created, designed, and executed in that time frame of 6 months after that signed LOI. More of a 9-month total project, because there's always that time frame of negotiation and planning. So this is, and you look at this project, we could look at from the standpoint of planning like this as well, to see how the plans were made. We're looking into $155 a square feet, designed, built, and furnished, for a space of, in this case, 13,000 square feet. We can have another example of a larger size plate of 25,000 square feet. So you see the price per square feet go down in that approach, where the more square footage you have for a density in a space, the lower the price per square feet, with still like pretty cool and stunning results in terms of finishes. We're looking into more of a design that basically is within the modernist approach. That's basically what we usually look into. We have another cool build out here for back to a smaller square footage. This one, 8,000 square feet, $165 a square feet, still same sort of timeline. So 2 sets of images. But even for $165, we're able to tear down hardwood flooring in a commercial space for the whole floor. It was pretty cool in terms of the finishes. Basically, again, have a look at the plans and how the budgets get spread. And maybe a last example here, back to 11,000 square feet, again, like fully designed, build, and furnished, and again, like in ratios of, in this case, $160 a square feet. So those are examples. We have many more, but the idea is just to show that it is possible to keep quick timelines, efficient budget, and still deliver quality space for tenants. And for us, it's if we land back to today's conversation, that's like what we call the integrated solution, the project packaging. It's part of it. One part is helping the tenants project themselves in space. And we'll look at a second part, which is integrate those needs in any space that could be available in the market. But I'd like to hear you, Chris, on that. I know you're not maybe directly involved in the design process of the deals you run, obviously, but is there things you see and hear in the market today from what the tenants are looking for in terms of how they project themselves in choosing a space or trying to choose a space in order to answer the needs they have for their team?
And while you're answering, Chris, I'm just gonna share another poll that's gonna be leading our conversation later.
I would enter by saying I wish I was more involved in the design process. I find it really exciting and really fun, and I'd like to think that I could come up with spaces as nice as what you've just shown. But I think it's kind of one of those. The devil's is in the details, and it's a lot. It's a lot harder than people think, which kind of is my segue on that. Funny enough, because like I think everyone wants to work in sort of in spaces that you just showed from an aesthetic standpoint, and the reality is that having nice design is it makes you feel good. It makes the space feel great. It reflects well in the organization. The truth is that when working with organizations, they are saving, except for certain companies that are so large that they have their own internal real estate and procurement and services and whatnot. By and large, people who are working on the client side are not specialists in the matter, and so there is an element of wanting to control scope and design, but there's also an element of managing efficiently. And how do you deliver a look and feel while being overall, just very conscientious of the cost structure that's associated with the deal? And so while it's fun to have the ability to make all the decisions, I would often in this case say that there's something to be said about sort of framing people and creating, language in which people can project themselves and see themselves while also not necessarily going to the nth degree of individual customization, right? Because that can slow down processes and has a huge cost incidence on the deal.
Totally. It's I'm going to reuse those words because basically when you say framing, for us, it's like framing without the feeling of being framed. So if we're able to sort of pre-select and pre-package the numerous design decisions there are to be taken in a project, you can have a frictionless journey of choosing without being confronted by the bad surprises of either overcost, like cost overruns or time overruns, because most design processes are not held within options that were vetted either from the budget standpoint or a delivery time standpoint. So I guess that's a good way to see how we go about trying to frame without that feeling of being framed, which is super important because nobody wants to feel framed, but we like to have guided decisions as clients and as consumers. So for us, if I pivot to this slide, it goes in two big categories. The first one is, we've talked about it quickly. So how can we project ourselves in a space? And then once we get to, understanding the business sector that people work in, those are related to needs and functional planning. We then need to understand, the plan options and their density. We'll quickly talk about that because the density of a build space has great impact on cost. So the denser you build a given square footage, the more the cost will go up. And it's also real in the opposite side. So if you don't like a budget, you can, remove part of the density in order to impact your budgets. And basically it drives the end, which is a framed matrix of cost. So most people, when they're given a framework that they can play within, they actually like the journey because they're guided. So we usually buy stuff in our day-to-day life and we know what they cost. You shop around for any goods or most services, you will know what it costs before you choose to buy. But weirdly enough, the design industry usually does not provide this guidance. So people get excited and, we throw in tons of stuff we like, but then we figure out what they cost and oops, there's an issue.
I know this from having renovated my house, and I know
well,
we could run away from you.
Yeah, well, sadly enough, most people, if not all people that went through a design and bid and build process have lived, part of that problem from, contained smaller versions to extreme versions. And I think from our standpoint today, which is the real estate commercial sector, there's also the responsibility of the partners and of the landlords and of people helping tenants to sort of guide them in a solution that will be contained somehow in their business needs, because we want quality space as we've seen, but we want it in a way that doesn't cause trouble or cause harm from a financial or a time delivery perspective. So we'll see quickly what it means, that first initial section, and then we'll dive into, okay, cool. Once we understand needs, it could be in many buildings. So if you see a build out within a space, most of them could be taken from building A and put into building B with minor modifications. So there's a way to sort of go about that, if either as a landlord, if you're the owner of multiple buildings, or as a tenant, if you're looking into different options, you could use that same framework. We have our own at A+, but we're vetting that the industry sort of learns to go about pre-designing and being more responsible on pricing stuff they show before asking for a decision from a client, compared to just showing beautiful stuff that will get priced someday and might create challenges. And Chris, for you, it's not going to be new stuff. You've seen that before. It was also the result of you pushing us and saying, guys, I need to be able to guarantee fast pivot to clients and still preserve budgets that make sense. Because if not, we're going to kill the deals. They're not going to happen. So we went about and asked ourselves, okay, what does that mean? How can we do that and provide a solution for landlords to basically position themselves in the market with a clear vision of what they wanted to do and offer almost as a product options for different tenants. So initially, we could see that tenants might have needs in all these verticals or sectors. There's more, obviously, in the industry, but some tenants will have office needs, education needs, industrial needs. So today we're going to focus more on office, but it's interesting to just keep in mind there's like real estate is vast, and this is only a sub-selection of everything that's a need within the industry. And all these parts or sectors of activity have needs that are pretty much the same from one tenant to the other that operates within that sector. So once we understand that, we could think of the design process as framing the needs that are most likely to occur within a space. So I'll show two examples of ways to sort of drive a design process within a building to suit needs for a vertical. So that could be, one way to take a floor, in this case of a rectangular building that's empty, and say, okay, we're going to, create a full build out for a full floor. That's one way to do it. There's many ways, but that's one way. This is a different building that's more of an L shape. And this one driven in more of a, let's divide the full floor in 4 types of suites or of offices. And then we pushed that in order to answer to your initial question, Chris, and said, okay, what if we take that same floor subdivided and try to price every options as if it was a product? So we get densities for all of these build outs. They have different square footage and price per square feet. And that was sort of the initial way to address ways to offer options for an empty floor of a landlord and say, okay, what if the leasing team goes to market with that and see if anybody's interested? And I'm going to pause for a second here, but you've seen that one, I guess, quite some time ago, but how does it resonate today when you see that slide back back again and maybe refer to the full scope of that story.
Well, it's funny because I know how the story plays out.
Yeah.
And what I would say, so for the benefit of everyone on the call, how the story plays out is the floor leased to a single tenant. It was a great transaction. It's a significant floor plate there. It's just shy of 50,000 square feet. It was a very important transaction. And really it was the fact that the fact that a lot of this pre-work had been done allowed us to effectively solicit the client in question and to have the required pricing and confidence in our model to do the deal, which was rather tricky for a variety of reasons, namely the client in question's limited ability to disperse capital on construction. Therefore, all construction had to be contained within the envelope of a deal. And so were it not for the pre-work that was done, I don't think that the bigger deal would have gotten done. So while I like this, I'm mostly happy that we leased it to a single tenant.
Well, for sure. And maybe for those who don't have all the backstory, this was used by the landlord to sort of pitch options to different tenants, but also to an existing a tenant that was looking to expand. And when they saw that and they saw the price points that were offered, because that's the main shift. It's like to come up to the market and say, this office build out is $135 a square feet. So you don't see that really. So that was pushed from that idea of pre-built suites that came, let's say, right after the pandemic, that couldn't really evolve that much because it was too intensive in capital, as Chris explained earlier. But then for that tenant to see it, it was like, oh, but could we get the full floor? And then at the end of the day, those should be used as tools to rent space. So in that case, it was even better to rent the full floor than part of that full floor. But if you look at it from the angle of the tool we're trying to showcase, this could be used by any landlords in the city and just usually say, okay, let's pre-design for our empty floors options for potential tenants of any sector that fits within the personas of the tenants we're looking for. So in this case, if you look at, those 4 options, you could divide them and get a pricing for each. So it could have, been rented by 4 different companies. It didn't, which was happy, but it could have. And went down the path of that initial strategy, you could have looked at it from this standpoint and say, okay, so what does that Suite 304 have to offer? So, it could basically be occupied by 128 open workstation, so people to work in, 11 collaborative spaces, a kitchen, 6 offices, and 4 phone booths. And basically you get the spread of cost, but then most tenants, they'll want to personalize part of those plans and for sure all the designs. So for us, that's where we came about understanding what will impact cost in a project. And one of the main driver is density, as we said earlier. So I know, this is a concept that's pretty new, but the more closed space you build, the more the cost tends to go up. So we basically took like tens and tens of projects that were built and tried to understood what would create differences in cost. And we just understood that, if you have an open concept of 20% build compared to hybrid concept, 40% build, and closed concept, 60% build. So the more you build, the higher you push the construction costs, and the higher the price for the overall project tends to go up. So that is basically used to guide tenants in order for them to understand the impact of their decisions. And I know, Chris, it's not your favorite slide, but it's still part of today's presentation. And it's basically linking the cost of these 3 scenarios of open, hybrid, and closed to the size of square feet a tenant is looking for. And basically, the higher the square footage, the lower the price per square feet. So these things put together is kind of the end of the shaping of how to help a tenant project themselves in plans to showcase their needs, their functional needs. And obviously the budgets, which is, okay, can we afford it? Does it make sense from a business perspective? And usually that helps a tenant choose a space. But then no design is done yet. And as Chris, you said earlier, design is super important. So we jump into this. And now I'm pushing it back to you. I don't know if you've seen that slide prior, but basically this is trying to also pre-package design themes in order to help tenants say where they stand. So, some will like the top left corner, which is more of a minimalist and bright look and feel. Some will, like the more top right, which is vibrant and bright. And then you could, play but bottom left, minimalist and dark, and bottom right, dark and vibrant. So again, just a pick and choose of where would you stand. So Chris, where would you stand if you'd need to pick up one of these images if it was to be your office?
I mean, there's days where I'm minimalist. There's days where I'm maximalist. I think on the work scale, I tend much more minimalist, and I've done the bright and the dark. I like them both.
Okay.
I think the idea is this gives, I think, a really good framework for people to identify their likes and dislikes, and to really sort of go in a decisional direction that makes sense. It simplifies what for a lot of people is hard to sort of describe.
Yeah. And to take back what you just said, we could have said, okay, so let's take you into more of a detailed view of what the minimalist bright or minimalist dark would look like. And then we would take you there and say, okay, so Gustave, which is one of those collections we have on the bottom left, this is how we expand from one image to a few images. And then we could even expand more into, let's look at lobbies. Let's look at, conference rooms, open spaces, closed offices, functions. Let's look at how Gustave would pan out. And the same way we could do with Anne, which is bright and minimalist. And again, it's how to pre-package options that tenants can relate to that we have vetted in budgets. So we just guided you through saying, okay, Chris, you need 20,000 square feet. It will cost you $140 a square feet. Then we take you and say, okay, what do you like? And then you say, I like Anne, let's say. Okay, cool. So we dive into the Anne collection, and then all you see is pre-vetted. So whatever you pick there will work. So that, again, is sort of changing the paradigm of how to design space, of saying, let's make sure we budget what we put within options. And
I get that answer of one of the questions we have about the look. So does the look has an impact on the price? So from what you said, it's the contrary. Like before you're setting up the price, and after that you choose your look.
Well, I mean, does it have an impact? Yes, it would have an impact. Most standards is let's pick stuff we like and then we'll see. So the higher the quality of whatever you pick, the higher the price it'll be once you go to bid. But if we reverse it and say, wait a second, it's a decision that needs to be balanced on timeline, needs, and budgets. So if you frame a budget, then just make sure whatever you design fits within that frame. So it's like I mean, it should be standard, but it's not, because the industry was not structured that way. Now we see more players in the industry trying to say, okay, let's be part of the solution where people as potential tenants don't want cost overruns. They won't sign that lease. So we see more and more people being, part of that change. We certainly want to be part of that change as a company. I think, Chris, you were sort of a spark. But for us, it's super important. As consumer, no one wants to choose something they like and then be told, no, you can't afford it.
I was gonna say, you know, for some people it might be when they go shoe shopping. In my case, it might be when I go buy wine. If you give me sort of the whole
Yeah,
wall, I somehow always end up
yeah,
with the most expensive
yeah, exactly.
bottle there, right? But if we limit a range, then you're able to make a decision within what actually works, right? And from a process as important as designing and essentially financing and signing for, you know, let's be clear, in this case we're talking in most cases 10-year transactions. These are major considerations. Nobody wants to go down the line and then at the very end kind of find out that, oh, what I chose doesn't work for me.
No,
Once you've
and,
fallen in love, then it doesn't work, right?
and it's even and as you mentioned in your probably the personal project you mentioned earlier, the worst part is that in our industry, once you in the traditional approach, once you learn that you can't afford it, it's too late because you've spent hundreds of thousands of dollars for plans, and then people start talking about value engineering. But if you're trying to value engineer 3, 4, 5, 6, 7% of a project, maybe you'll get there. But if you're trying to value engineer 30%, forget it. You need to, so time wise, you need to restart the design process. You need to respend for plans, and you're not even sure you're going to hit it the second time. So that for me is unacceptable. As a consumer, like I'd never want to be on that other part of that situation. So again, we talked about paradigm shifts. This is part of it. It's a way that people could, you know, plan the budgeting part and the designing part of any project just a bit differently and being cost conscious. And once you get that done, I'm not saying it's easy, but once you get that done, you create a lot of value for your potential clients, and you're able to guarantee stuff and put your word behind that guarantee and deliver on that guarantee, which to me should become a standard in our industry. So, you know, this, Chris, the way we show it, we're sort of talking about customization parameters as an overall look and feel for those two images we've just shown. We could have went to Denise, which is more of a bright and vibrant, and we could play like that for any part of the quadrants. But once you pick and choose a style you like, you're not done, right? Because it's only an overall vibe. So you still need to go down customization of these elements, which is okay. Now, let's say you picked Anne or Denise or whatever collections. What are the doors and frame within that collection? What's the flooring? What are the plumbing finishes? What's the signage? What's the lighting? And all these categories also have subcategories of options. So it is a big journey to map out all these things, but that's how you're able to basically design within budgets and do it in a super timely manner, because you limit the options. You give just enough options, but not too many. So clients feel that they're able to pick and choose and customize without losing themselves in a never-ending journey of, you know, eternal options and you know, customization to a level that creates a lot of friction. So maybe lastly in that section, we could keep going because, right, you have, let's say you're in that section of what can I customize? And let's say you pick furniture and we say, okay, let's customize the furniture part. What are the subsections of furniture? And then you join into, okay, we have chairs, we have tables, we have phone booths, we have different elements. All these things needs to be pre-vetted within the category of the collection and the framework of the budget. And as long as you give options within these subcategories, clients will be super happy to pick and choose and basically customize their projects. And, you know, you're able to go down that journey of fully customizing a project in order to get a tenant satisfied with a design option that fits budgets, fits timeline, and technically would bring us to that signed LOI. And if we get that signed LOI, only then we start the real design process and the real execution of plans in order to build out a space. But for any tenant, and maybe we're into, our last section of today's webinar, but I think it sets the stage for the future outlook of what could be done, and how landlords and real estate people could go about, shifting just slightly, or maybe more than slightly, their mindset of, how to go about putting available space on the market, and putting it in a way that is a bit different and is a bit more aligned on their potential clients' needs. And finally, in order to give them a journey that's not only fun to go through, but that they can guarantee output, which I think is super important in today's market. Even if some clients won't need that level of certainty, I guess there's a lot of companies that would like to have that. And maybe, Chris, I'd like to hear you, as not yet as a final word, but almost, on what you see for the future in that sense.
The almost future, the almost last word on the future. Listen, I think that real estate as an industry is an opportunity ripe for for some advancement. As we explained earlier, there's kind of models and rapport between tenant and landlord, that each group can decide amongst themselves how they want to manage. And when we talked about this, there are certain organizations, especially as you mentioned earlier, like global organizations, that will still want to be in charge of their overall procurement, real estate needs, and all that. And that's okay. And that's great. However, if you look at the overall landscape, that is not the majority of users. And the majority of users, I think, would benefit from a more integrated approach. And so I think, looking at this as a landlord, you are a service provider hoping to attract business to you. So there's a lot of room to rethink it. The dollars and cents can ultimately be the same, but there's a lot of room to rethink how the product is offered to a client and what the friction points are in doing that. Because I do think that, all things being equal, once we return to a certain point of equilibrium within the market, that will be a differentiating factor, is the landlord's willingness and ability to think laterally and to think from a customer-minded perspective of how they offer their space. And dollars and cents being equal, you're going to want to go somewhere where somebody's going to take you in hand and coordinate essentially a sales program that's tailored to meeting your needs. I mean, I think ça va de soi, right? And so yeah. I see just lots of opportunity for the industry to continue evolving and integrating a lot of the concepts that we're talking about, which is a client-focused approach to sales.
And I think, as any experienced and great salesman, you're, Chris, a man that knows how to manage expectations. So you're framing that saying the dollars and cents are going to be equal, so blah, and all the rest. But the beauty is, it's not.
Right.
It's a lot more efficient, and the efficiency gets translated in either faster delivery and or lower budgets. And this whole philosophy could be attached to a more agile approach of project management compared to the traditional waterfall approach, which is more like siloed. And a well executed agile methodology could bring up to 30, like the theoretical agile methodology talks about 30 to 50% cheaper, 30 to 50% faster. It needs to be well controlled by the players of the method. But, we're part of those who believe that the industry should be pivoting to agile, because there's way more leverage in the complexity that we're now facing. Back in the days, the complexity was different, so you didn't need that. I think in today's world, that goes way too fast, and people have higher expectancies of everything. As a future outlook, I wish that more companies pivot, and that we as an industry show that, we're able to adapt and create more value with the efforts we put in.
Well, we have 5 minutes left. I have two questions for you guys. The first one for you, Chris. So why, if this new model, actually, this integrated model is so efficient, why the industry hasn't shifted yet? Why is the reason?
Why? That's actually a very good question.
Small and easy one for you, Chris.
Tough question, but I
It's
don't know.
a bit
Do you
of
have
a political.
insight?
It's a bit of a political answer. No,
Okay.
I mean, and listen, the industry. I mean, real estate is as old as it's the oldest industry in the world, right? And so, if you look at specifically, I deal in, as I mentioned earlier, institutional grade office leasing and development, like. It's a limited pool of players of either, you either have an institutional pension fund, financial institution owned building, or REIT being a publicly owned building, or you have in the case of Montreal, a strong group of well-capitalized private players. At a certain point, the industry has been built a certain way. And while the events of 2020 proved to be disruptive, over a long period of time, it is sort of a blip. So it's an opportunity to course correct, and in that, I think new ideas have been formed. Today we spoke about A+ and the work we've done together. We made, I'd say, a considerable amount of the net new leasing done in Montreal and office space over the last 5 years was done together, and I say a considerable amount. And so there's a proof of concept there that works. That being said, it is a paradigm shift for organizations that tend to run rather lean and are on a model that has always suited them, right? And so what's going to prove now is over time, like I said, as we emerge from crisis and we're kind of really moving back to kind of the normal way the world works, people will have the opportunity to approach this not from a critical need or whatever, but more from a pragmatic service-oriented approach of how they want to operate their business. And I do believe that the companies that will integrate these types of solutions and platforms will prove to be the winners overall. And so that change does take time. It involves a change of thinking, a change of way of doing things. And it's certainly not every organization or owner of properties that today is vested in doing that, right? And so it's not something that happens overnight for that reason.
Sure.
So we're going to close this then by saying, I think it's great to be part of that change, and let's just keep going. I guess as a company, we're inviting people to sort of copy this approach and try to go to market with it and be part of that change, because it will open up. I'm sure it will. And the more people do it, the more people, will be exposed to that method.
Seeing the value.
Yeah, I think as any new thing, any different thing, it needs time. But yeah, we're just gonna keep going. And again, well, thanks, Chris, for the spark that was created a few years ago, and thanks for the time today.
I appreciate
thank you.
Thank you. I appreciate it. Thanks for making the time and the space for me. And the last thing out, and I know people are dropping off, but for anyone who is listening in, to feel free to reach out at any time, whether on the landlord side or not. I'm always happy to grab a coffee and discuss real estate and outlook. So
thank you so much. Thank you so much, everyone. Thank you for attending the webinar. So stay informed about our upcoming webinars in the LinkedIn A+ page. And if you're curious about our project, the project we realized, you can just click on the website there. Thank you so much, Chris, for your time. Thank you, Louis, and see you very soon.
Thank you, guys. Have a good one. Take care.